Hi everyone. So far, we've built the foundations of economics. We've seen that scarcity forces choice, choice creates opportunity costs, the PPF models, trade-offs, and economic systems determine how decisions are made. But now we move from theory to something more dynamic. We ask, how does the economy actually work in practice? More specifically, who produces what, who pays whom, and how does money move through the economy? To answer this, we introduce the circular flow of income. Now, instead of thinking of the economy as isolated decisions, we now think of it as a system of flows. Money does not just appear and disappear, it moves continuously between different agents. At the same time, real resources like labor and goods also move through the economy. So we are dealing with two types of flows, real flows and money flows. The circular flow model brings all of this together into a simple but powerful framework. Now, to understand the circular flow, we must first identify the key participants in the economy. There are four main economic agents. One, households. Households provide labor to firms. In return, they receive wages. Then, they use this income to consume goods and services. So households are both suppliers of labor and consumers of output. Two, firms. Firms hire labor from households. They use this labor along with capital to produce goods and services. They then sell these goods to households and the government. So firms are producers and employers. Three, government. The government plays multiple roles. It collects taxes, provides public services such as education, healthcare, and infrastructure, and also regulates economic activity. It also redistributes income and influences overall economic activity. Four, financial sector. The financial sector, including banks and financial institutions, connects savings and investment. It takes savings from households and channels them into investment by firms. This is crucial for economic growth. Importantly, every economic transaction involves at least two of these agents. Now, let's start with the simplest version of the model. In the basic circular flow, we only consider households and firms. There are two types of flows. The first is real flow, which is where households provide labor to firms, firms then provide goods and services to households, and this is the flow of real resources. Another one is the money flow, which is where firms pay wages to households, households spend money on goods and services produced by firms, and this is the flow of money. These two flows move in opposite directions, forming a continuous circle. This is why it is called the circular flow. Now, we make the model more realistic by adding the government. Households and firms pay taxes to the government. Taxes are called leakages because they remove money from the circular flow. The government then uses this revenue to fund education, healthcare, infrastructure, and welfare. Government spending is called an injection because it adds money back into the economy. Now, this introduces a key concept. The level of economic activity depends on the balance between leakages and injections. Leakages include taxes and savings, injections include government spending and investment. If leakages exceed injections, the flow of income shrinks. If injections exceed leakages, the economy expands. This is the fundamental idea in macroeconomics. When households save money instead of spending it, that money leaves the spending flow temporarily. This is a leakage. However, this money does not disappear. Banks take these savings and lend them to firms. Firms then use these funds for investment, such as building factories, buying machinery, and expanding production. Investment is therefore an injection. This shows why financial markets are essential for economic growth. They transform savings into productive investment. Now, the circular flow model helps economists understand several key things: how income is generated, how spending creates demand for goods and services, how jobs are supported, how taxes affect economic activity, and how government policy influences growth. Most importantly, it shows that the economy is interconnected. A change in one part of the system affects everything else. Now, let's apply this to a real world example. Parents pay school fees to private schools. Private schools pay wages to teachers and staff. The government may tax either households or schools. This tax revenue is then used to fund state education. So money flows between households, schools, and government. The circular flow model allows us to trace these effects logically. For example, if taxes increase, household disposable income may fall, reducing spending elsewhere. At the same time, government spending on state education may increase. However, while the circular flow model is useful, it is a simplification. It has several limitations. First, it assumes instant adjustments. In reality, changes take time. Second, it does not show price changes, but prices are crucial in determining behavior. Third, it ignores international trade. In reality, imports and exports are major components of the economy. Fourth, it assumes stable behavior, but expectations and uncertainty play a big role in real economies. So again, this is a model, not a perfect representation. As we move forward, we will begin to study individual markets. We will look at demand, supply, and price determination. But all of these markets operate within the circular flow system. Understanding this model helps you see how microeconomic decisions connect to the wider economy. Now, let's summarize. The economy consists of interacting agents, households, firms, government, and the financial sector. Money and resources flow continuously between them. Taxes and savings are leakages. Government spending and investment are injections. And the balance between these determines the level of economic activity. The key takeaway is this: the economy is not a collection of isolated decisions, it is a connected system. Every action has ripple effects. Understanding these flows is essential to understanding how the economy functions. Next lesson, we would begin microeconomics properly by studying demand. Thank you very much.